Thought I'd do a video to help you understand how to make sure you know all the entries for an inventory ledger account, because that seems to be one of the biggest ledger accounts and the one with the most entries to remember. Okay. When you're practicing, it doesn't have to be pretty, it just has to be right. I always make it like a conversation. If you had to explain to someone else what goes in an inventory account, it should be able to help you to work out what the cross references are. All right, we know inventory is an asset account. If it's an asset account, it increases on the debit side and it decreases on the credit side. All right, so by knowing that, it makes it easier to know what side things go on. It's an inventory account, asset account. Assets usually balance on the debit side, so our opening balance will be on that side. For this exercise, I'm not putting in amounts, I'm just putting in the cross references and just putting in an X, so we've got a bit of an idea. Okay, now there's lots of different ways to remember it. This is just one technique that I use that helps me out. All right, so I'm going to start with my debit side. What makes inventory go up? Okay, if I had an inventory card, anything that is in the in column would make it go up. So that's easy to know. The source document tells you the type of transaction. Okay, so what could make things go in the in column? Obviously when you purchase inventory. So if you purchase inventory, the cross-reference has to do with how did you purchase it. If you purchased it for cash, the cross-reference will obviously be bank. If you purchased it on credit, instead of the source being the bank account, the source is accounts payable. And obviously you'd put the name of the accounts payable for this section. So that's one way to make inventory go up. What else makes inventory go up? Well, if a customer returns something to us, that's going to make our inventory go back up. So we have to think of the general journal entries for a sales return. And you know our lovely song, BSGCI. So a sales return, the cost price entries to do with the inventory, the cross-reference is the other account affected. So it's the CI part of our little jingle. So if we're in the inventory account, the cross-reference for a sales return has to be cost of sales. It's increasing our inventory and decreasing the expense because we've no longer sold it, so cost of sales would get a credit. Okay? Last one, most common to go last because it usually happens at the stock take, is the inventory gain. Okay, so 2 B's in a row. ACI, baci. Baci means kisses in Italian. Look, you're learning something new every day. So therefore now you've got a bit more of an idea of other way to remember it. Okay, let's go with the credit side. On the credit side, this is what makes inventory go down. Okay, what makes inventory go down? Well, one transaction would be a sale. A sale, as we just talked about from our lovely song BCSGI or ACSGI, cost of sales represents it going down. It could be for cash, it could be for credit. Obviously, it would be for each individual transaction, how many times it happens. What else can make it go down? Well, we talked about this in class, advertising. Advertising, if you are removing your stock to promote your business, the advertising expense increases, gets the debit, therefore the inventory decreases, it gets a credit. If you have a purchase return, we are returning the goods to the supplier, the accounts payable, so that would also have an account cross-reference in there. So just to highlight that, that's when you bought the stuff, that's when it was returned. Looks nice purple. Okay, so we've got 2 A's. Drawings, if the owner takes it out for personal use because of the entity assumption, you know it's going to decrease the inventory. And just like the other side, you're either going to have an inventory gain or an inventory loss. If it's a loss, it goes on that side. Okay, so same thing as before. How are you going to remember all the entries? Caddy. You got a caddy to carry stuff. It's going out. So that's how I'm going to remember my inventory. So that's how to practice the inventory ledger account. What you can also do, so I need to practice this ledger account. You can see that it's not open in front of me. If I can't remember anything else, I know that there's Bachi, which means kisses, and I know that I need a caddy to carry me stuff. If you can at least remember that, then it's like, well, I've got the first letter. What could it be? I know it's always cost of sales on that side. That hopefully will jog your memory. Okay, it could be cost of sales for the sales return on that side. Okay, I know that the last 2 usually here is the advertising and the drawings. I know this one is inventory loss. That makes that one inventory gain. So I've only got a few more to go. All right, let me remember. Inventory debit side, it's increasing. What would make it go up? Oh, I bought stock. How can I buy stock? I can buy it from my accounts payable. Right, I've got the A now. That might remind me, well, sometimes I return that stock. Only got 2 more letters to go. Opening balance has to be that one. What's another B one we do commonly? Bank. So it's just practice. If you keep doing that, you can't go wrong. Draw in another one. I'm on a new page already. Just hang on a sec. Right. Anytime you've got a spare piece of paper, you're on the bus, you're on the tram, you're coming to school. Not 2 C's, A, D, 2 A's. See, it's just practice, okay? Once you get the habit of it, the more you do, the easier it becomes. Please, please, please practice these.